Welcome to Spidell's Federal Tax Minute. I'm your host, Catherine Zidane, and this week we're talking about expanded virtual currency reporting requirements under the Infrastructure Investment and Jobs Act. We'll be covering virtual currency in our 2022 summer tax webinar, along with other investment planning topics and real estate and retirement issues. You can see a list of available live webinar dates at caltax.com under the Webinars tab. There's still a lot of uncertainty surrounding virtual currencies, and not just concerning reporting requirements, but as we saw this past week, cryptocurrency itself is a very volatile asset. This was evidenced by the crypto meltdown that erased billions of dollars of value after one stablecoin crashed. But the recent developments regarding reporting these currencies have raised their own issues. The Infrastructure Investment and Jobs Act expanded information reporting requirements to apply to digital assets like virtual currency beginning January 1st, 2023. The Act expands the definition of brokers required to provide Forms 1099-B to include businesses that regularly provide any service that transfers digital assets on behalf of another person. For example, any platform where cryptocurrency is bought or sold. The 1099-B reporting for virtual currency transactions doesn't officially go into effect until 2023 transactions, which are reported in early 2024. But many virtual currency platforms like Coinbase and Robinhood provided 2021 year-end reporting statements that closely resemble the 1099-B forms issued by other brokerage companies. It's likely these year-end reporting statements were created in preparation for the forthcoming 1099-B reporting requirements. The Act also expands the $10,000 cash transaction reporting requirement via Form 8300 to digital asset transactions, and the Act defines a digital asset as any digital representation of value recorded on a cryptographically secured distributed ledger or any similar technology. This includes most cryptocurrencies and potentially some non-fungible tokens. The expansion of the Form 8300 filing requirements for virtual currencies is effective for returns required to be filed after December 31st, 2023. But keep in mind that Form 8300 needs to be filed by the 15th day after the date cash or virtual currencies are received exceeding $10,000. This means that the Act's expanded reporting requirements take effect for transactions on or after December 17th, 2023, which is 15 days before January 1st, 2024. Even though the reporting requirements for virtual currency transactions don't go into effect until 2024, it's a good idea to start having early discussions with clients about these requirements if they're considering accepting virtual currency payments in their trade or business. The cryptocurrency industry expressed concern over the expanded 1099 reporting changes made by the Infrastructure Investment and Jobs Act because of the tax reporting burdens placed on crypto miners and stakers, who typically don't deal with customers and therefore don't have access to the information they'd be required to report. Staking is a way of earning rewards for holding certain cryptocurrencies. Some cryptocurrencies like Tezos, Cosmos, and Ethereum allow holders to stake some of their holdings and earn a percentage rate reward over time. The Treasury plans to issue regulations to define the term broker and will analyze traditional securities versus digital assets. You can get quarterly federal tax updates and get the news you need to keep your clients current with Spidell's quarterly federal tax update webinar series. You can register for a year of live updates or single sessions at caltax.com under the Webinars tab. That's all for this week. Join us next time for another installment of Spidell's Federal Tax Minute.